Welcome to Power Charting. I'm Bruce Fraser, your host. We have a special guest today, Andrew Cardwell. Dr. RSI has come back to be with us. Andrew, welcome.
How are you, Bruce?
Oh my gosh, I'm great. Good to hear your voice. Hey, listen, what happened is that I got up this morning and the stock market was acting a little crazy, which often happens on the day that I record. So
Sure.
I don't understand why that happens, but I thought, so I completely changed my whole mix of materials that I was going to show today because I have a number of things that I think are really interesting, and the market's sort of like acting a little odd. So anyway, and then I thought, let's get Andrew on here and let's do this together and have a discussion about markets.
Yeah, let's wake him up and see if he's got any bright ideas for today.
Yeah, so I woke Andrew up. He's had a cup of coffee. Let's get started. So
Yeah.
anyway, this is how to get a hold of Andrew. I understand that Andrew's going to stop offering his course. That's
by
a
the
rumor.
end of the year.
That's a vicious rumor.
Well, it's a rumor that a couple of my clients have started, and I'm going to be focusing more on trading going forward. And anyway, it's got my courses. I'm starting a service for them. I'm going to write the commentaries in the same language I taught the course.
Well, so everybody is forewarned that if you want Andrew's course, now's the time.
Yeah, so by the end of the year, it'll be gone.
So Andrew, what I thought we'd do is go through these charts. I've interspersed a number of RSI type charts that we can look at for your wisdom and interpretation. And the first thing I'm starting with is the TLT 20-year US Treasury bond price, which is really fascinating. This is a one box reversal point and figure, 1 point scaling. And obviously we see that here a beautiful accumulation type structure that has resolved itself into a markup. So what I did, Andrew, is I took just across here, and you can see I can't draw a straight line. But anyway.
Well, that's what the markets are for, to confuse people. Nobody can draw a straight line.
No, right. The markets don't go in straight lines.
No, and fundamentals are for those people who don't know how to draw a line on a chart.
Ooh.
Well, no disrespect to fundamentalists, but the truth is in the market. As one of my clients and students says, the truth is in the price. Upper left to lower right is a downtrend. Lower left to upper right is an uptrend.
Well, wiser words were never spoken.
That's right.
And so here, across this area here, I've got a count of 16 columns times 1. This is a trading count. So if you take it from the low, it goes up to 149. We just hit it. So you can see it's sort of a climactic surge up to that 149 level. And then from the count line at 138, it counts up to 154. And I think that we could actually make this count bigger, potentially over to here. And so that would be a consideration, but I wouldn't be a bit surprised if in this area it doesn't consolidate before a next run up. And one of my concerns, and I talked about this with our Wyckoff market discussion group, was that when you see something like this and really a contrary opinion type move, that the bonds look like they wanted to start rallying. And that to me was maybe an indication that the bond market was expecting some kind of a correction in stocks.
Well, there was a lot of talk that rates were going to rise and everything else, but I have seen nothing in my RSI work. When it was up around the 155, I said, we're going after the 135. You can look at the range. Yeah, you can see the range rules there. Upper left, it had trouble getting above 60 on the RSI. That's a downtrend. Then it went down into February, got a little overextended, had a little bounce, and then it came back to the 30. to the 30 level and the next pullback to your right there. And then it went up through 50, almost took out the 60 level, backed off, and didn't drop below 40 right there. You got it. You're a good student. I wish I had more like you.
Well, at least ones that can draw.
Yeah. Well, that's all charting and trading is, drawing the lines on the pages, on the charts. But you got to know where to draw the lines.
Well,
but that's a beautiful uptrend. I wouldn't be surprised we see, now this is the 20-year, but I wouldn't be surprised if we saw 1% even on a 10-year note.
Right. And the 10-year, which I didn't include in its chart pack,
that's okay,
has a beautiful accumulation structure. IEF is the ETF for people that want to go look at this and look at that. Now this is a little bit maybe out of sequence. Some of these charts are because I put them together so quickly. This is the bullish percent, which is a breadth indicator. I love them. Bullish percent on the energy sector. There's bullish percent on most of the sectors. So I encourage people to go look at those. So in this particular case, what I'm seeing, Andrew, is I'm seeing, well, and the way that I use it is when I see the line going down, I'm expecting some kind of a correction. And so when I see the line going down, I expect some kind of a correction. Right. And then when the line is going up, I want to participate in that uptrend. Now, I've been bullish on energy. There's been a big old base over here for a long time. But it's interesting now because we're getting a decline, which is getting into the area of oversold in my thinking. And you just had made some comments on this, what you're thinking.
Well, when I first saw it, I said, you're seeing positive reversal patterns in here. You know, I pointed out to you at the end of December versus the first part of February. You connect those two lines. I mean, that's actually it's selling off, but it sold off to a higher price than it did before, and then took off and almost formed what I'd call a bearish divergence. And a bearish divergence is not a sell signal as much as it's a corrective profit-taking signal.
Beautiful.
And then you got another one from the February low to this May low. But if you take those first two and you draw a trend line connecting those two bottoms you had there, no, the first one in February or December, I'm sorry, one in December. Yeah, there, and the next low that was made in early February. There you go.
Look how straight that is. God, I'm getting better.
I've learned to draw trend lines, and I teach my students that draw a trend line on your bar chart based on your RSI patterns, formations, or positive or negatives, and they'll keep you in a trade longer. And then when you have a moving average on a bar chart and it's staying above that trend line, it turns into a position trader. A lot of people are so used to losing money, they take a quick profit and then they chase it and never really get back in. They should have just held on to it.
So this is getting to the area where it's oversold potentially, and it's down into the support of the trend line.
Right.
So the thing that I would be looking for in the bullish percent would be to, you know, consolidate at a low and then start to tick upward. And that would be an indication.
But if it sells off a little more, you're going to get that same type of positive reversal pattern I see in the RSI.
Exactly. So that would be the thing that I would look for to confirm the conclusion of the reaction.
Yeah, I think once we get above 80, it'll be a quick ride to 100.
Now here we're looking at the Dow Jones Industrials, and I like to look at the industrials because I think sometimes it tells the cleaner story about what's going on. And people wonder why I like to do the point figures. The point figures tend to have a high degree of accuracy and so on. Here's a trend channel, reverse use of trend lines. And you can see here overbought and then a buying climax overbought. Now this is on daily data, and these boxes just represent where the anchor points are for the trend line. It's total Wyckoff approach to trend line construction.
Let me just interject something here. That
Sure.
first dot that you have there, then you have the one where it says BC.
Buying climax.
If you look at those 2 points as a left shoulder and look at the high that was made after it,
yes,
that could be the head.
Right.
This recent rally could be the right shoulder.
Yes.
And your trend line is right there at your ARST.
Now, here's the thing that we would look, this is the thing we would identify in Wyckoff. Also, notice this, we have volume off the peak here.
Right.
And that's a sign of supply, presence of supply. We had a lot of volume come in at the low, which has some demand in it because it came and stopped at support and produced a rally. So now the thing here is that we've had a rally into the channel, but it didn't get to the top.
Right.
Which
That's
is
why
real
I said
sign
that to me would be almost like a head and shoulders pattern. I had two left shoulders, one head, and one right shoulder right
Beautiful.
now.
Exactly right. And so
the volume dropped off too.
Look what we're doing here, Andrew. We're like right into the bottom of the channel, knocking on the door. It's trying to rally off that today. So you can see it's attempting to hold the channel here. And then you have additional support down here at the 33,500 level. And so it'll be interesting to see whether we get some kind of a break of the channel and out of it. Now, here's the thing we look for in Wyckoff is that this decline below the support line of the automatic reaction here is what we call a sign of weakness. And the sign of weakness produced a rally, but it went below a key previous low. Now, this is all within the context of just daily.
Yeah, but that sell-off, that mini sell-off there is what I call a fake out, shakeout.
Beautiful. Okay, so now let's look at, so this has the attributes of potential, call it short-term distribution. So here is the same chart with the RSI on it so that we can have Dr. RSI talk to us.
Oh, the patient's in trouble. It's a good thing he came in today. I have good news and bad news.
Okay.
Well, give me the good news.
Talk to us.
Well, the good news is it looks good, and you probably have some time. The bad news is you won't have much time.
How much, I was going to say, how much time do we have, Doc?
It's a question like that because we see the extension. I always call it overextended. I hardly ever say overbought or oversold because you're not overbought until you see a negative reversal. But that part above 70 is classic, the way I teach it. It exceeded 70. It came back down. And you can use that point where your pointer is right now and go to the left. Not on your bar chart, on your RSI chart. Come to the right, that little low in between. Raise it up there.
Okay.
Yeah, that low and the next low. And you find those two lows on your bar chart and draw that trend line connecting those 2 points.
Fascinating.
That one, you just went past it.
That would be what here?
Yeah, right there through the ARST.
Oh, okay.
And that would be looking like a positive reversal on a trend line basis that it just broke below and went down below 40, which says my range rules are shifting. Should have been resistance at 60, which it was. The 9 has stayed below the 45 on RSI. It would not take much to turn this thing sharply lower. And then seeing this morning, I told you I had a sleep test last night. And I come back and first thing I did when I got in the house is turn on Bloomberg and saw how low the markets were. And I said, there's going to be a very interesting day today. We may do 500 or 1,000 points to the down. But that looks like a range shift is taking place, a break of that positive reversal trend line. and hitting this last point of supply.
It's interesting, Andrew, how you can get this message here from your RSI rules that we get from studying the vertical bar chart, which we call tape reading in Wyckoff.
Yeah, I always tell people.
And come to the same or similar conclusions.
Bullish and bearish divergences and the way people use them is mostly, it's a reversal. No, it's not always the reversal. The trend lines that you can draw on your bar charts tell you more about a trend. Okay, where else are we going here?
I thought I had a point and figure chart intraday of the Dow. I guess I don't.
Oh, that's
so
okay.
We'll have to maybe pursue that later.
There's my favorite. Oh, that's my favorite chart.
Oh, this is really interesting. So go ahead and this is the financial sector ETF. XLF, and tell us what you see here.
Beauty. I would tell people, isn't that chart pretty? And they said, what do you see pretty in a chart? I said, it's talking to me. They said, yeah, but you've been known to hear voices anyway. So you look at the 3 overextensions above 70. Okay. So that gives you somewhat of a bearish divergence, and everybody would sell it thinking, okay, that's the top. Well, when it come down and it went through, it looks like 50 or 60 off this last one. Right?
There.
No, to your left. To your left. Just under the third peak above 70. When it popped above 70, came down, then it went back and it could not get above 70. Okay, so price went to a new high. The RSI didn't. That would be one that I'd be watching and say, okay, if this is a leading indicator, we're topping this out and the stock market's going to follow. You've got almost a negative reversal in there. Oh, goodness, man, I'm going to be tearing this chart this afternoon, tearing it up.
Yep. One of the things that I want to do is I want to point out again, preliminary supply, and then you would call this a head and shoulders potentially.
Yeah.
But this is a big sign of weakness, and here's a last point of supply.
And it ran right up into the 60 level.
Yeah.
And it was higher in RSI than before, but the price was lower. That's a failure swing.
Now I did a point figure. Let's see. And this is across this level right here, right there. Horizontal count, 36 columns, it's ATR scaling 0.2, and that gives us 7.2 points of count across here. And so assuming this is distribution, when I just counted it from the high 38.40, and that takes us down to 31.20, which is right there.
Well, that would make a lot of sense in my RSI work, because I think once this thing rolls off of, if you go back up to that RSI chart, you'll see the attempts it made to get back above 60. And it couldn't do it.
Yeah.
Looks like recently it only got up to what, 50 some right there?
Yeah, well, the moving average is at 52.6.
Yeah, so the RSI stayed below the 45.
Yeah.
And you also had the breakdown go below 40 all the way down to 30. So you got a range shift taking place.
Now here, sorry to go so fast, Andrew, but
I know we've only got about 8 minutes.
You're doing an epically good job considering but I just had a lot of charts I wanted to show. So here's another trend channel, similar to what we saw before, maybe slightly different. This is daily data, rallied up to the channel off these 2 points right here. This is a year ago, June and August, with a parallel taken here. And then look what we've done. We've come back in, we've attempted to rally up.
Well, let me interrupt for a second. That low that you're pointing on right there, that low is what, about 33,300. That's a number I'm watching for 2 reasons, because that's the lowest low we've made in the last month or so. And it's also just above the high, right near the high at the end of March. You see that rally that peaked above the channel?
Yes.
To your left. To your left. One more. right there. You draw a vertical or a horizontal trend line across that chart. That's a previous top, which first, when it comes back to it, acts as top bottom support. But if it breaks below it, we're going a lot lower.
We would call this in Wyckoff, we'd call that preliminary supply, because it very briefly reacts from that and then goes up into
goes up and
the
then
climactic,
it comes down the second time.
Then big persistent advance into the buying climax, bigger, more sudden reaction, and then range bound as it's creating a distributional structure. Now, what I'd like to point out here is, again, this is bullish percent. This is really a great indicator simply because the bullish percent is of the Dow 30 stocks. And so you can see here that as this line goes down, you have, and it actually started prior, this decline started prior to the peak in the Dow, which is wonderful. That's a great early indication. So we can see that produced a reaction. Another reaction here went down to an oversold condition below the channel briefly, and then a really good rally after that. And here, notice this. So here's a peak, which is really a lower peak.
So there's your bear divergence.
There's a divergence, and this line is going down persistently. We don't know how far it could go, but this line is dropping, and look at this, this line is dropping the whole time that the Dow is attempting to rally into this overhead supply trend line. And so that's a real point of vulnerability on the chart, is the combination of touching that trend line and the bullish percent indicator.
It also did not make any new high on that rally.
And not a new high. So that is a really interesting setup here. We don't know how low is, but we'll start to get interested again in the Dow when it can consolidate its lows wherever that might be and then start to rally again. So far, there's no evidence of that.
I'm just watching to see where it goes this week, because if it goes lower and goes below 33, then we're probably undergoing a range shift, and the moving averages are starting to roll over and turn down on close and on RSI.
Now here, this is the materials sector, which, there's been a lot of interest in the materials because of the this inflation concern that has shown up. But notice, and we're going to go a little faster here because we're down to 6 minutes. But here you can see this decline. Look at the persistency of this decline. And now look what's happening. Now it's getting pretty low. It's at 50%. So that means that half of the material stocks are now are not on a bullish percent buy signal. So that's a breadth vulnerability. Now here, notice.
Look at your low in March on the bully. Look at that low and the recent low. And take those two levels in the price on the price bars, the candles.
Yes.
That's your trend line.
Beautiful.
Yeah. And it's failing. If it fails to go up above that declining blue line, your percent line, then we're going down.
Well, now the thing that we would see, like here, we call this in Wyckoff being under the ice, because look at how it accelerated down into a low. It's like a mini selling climax, which often moves will end with a mini selling climax. That's a secret that I don't tell anybody. So,
well, that's one of those things that goes back to one of my Druisms, I think, is your favorite. You don't know what you don't know until you need to know it.
That is my favorite.
I know. I have a lot of people say that's their favorite. Then they take the course and say, I know a little more than I did over the last 5 years.
Yeah. So here, look at how flat this is. So there's no lift in this rally at all.
No, and I bet the volume's dropped off.
Combination of no lift in this rally, and you have half the stocks in the sector that are no longer on a buy signal, point of vulnerability. So This is still pointing down, so it's not ready to go. And once we see it start to trend up in some initial way, then we become more interested and maybe the support
I'd just
will
be
hold.
protecting, as they say, protecting your assets or covering your ass, one of the two, because this could really be one of the few times that we're going to see an acceleration and downtrend. It's starting to line up for me like I don't want to be involved in stocks right now. There's going to be few. It's going to be a stock pickers market, but I'm seeing the inflation and I don't think it's transitory. I don't think it's anything. Seeing yields drop the way they're dropping, I'd rather be in commodities and currencies because this drop in interest rates is going to affect the dollar index too.
Fascinating. So this is really an interesting chart. This is the New York Stock Exchange bullish percent. So you can just New York stocks. Here's the NYA, New York composite.
Right.
And
I always like that. People don't talk about it enough.
But we talk about it.
Yeah. Well, we talk about many things and entertain as well.
Yes, right.
But that's multiple bearish divergences in there.
That look, the whole year, you've had a series of lower highs. Now, this can happen. It can go on for a long time. But notice how this is all going in the context of rising index prices. And this has also been the case with the NASDAQ composite, as the mega cap growth stocks have really dominated in here, and they have so much market cap that they can.
But you also have that high point there. We drew the line almost 80, and each successive one was lower. So you're right in the recent action.
Mm-hmm.
All that's multiple bearish divergences, and I've seen that, and I say, stand back, 'cause it's going to blow.
Well, this is
and
the
it would
thing
take
that
those out.
This is the thing I'm watching is right here. You can see that it had a series of divergences on rising index prices, and then the line started to just go south. And that was in this area right here, which was at the end of 2018. Pretty sharp decline. Well, look what's happening. Now this line is going down, straight down, and it's in a downward stride, but the market is just now, if you look at this area in here, it looks like distribution the way that the Dow looks like distribution. And so you have this line going down as it was here, as it was here, as it was here. And as long as that's going on, that's a point of vulnerability, especially following a series of divergent non-confirmations of the uptrend here. And so this is just, to me, until this settles out, makes a low, starts to climb. I like to see it climbing uphill, even against a falling market. So if you look really closely at this low, this is walking uphill against falling index prices. This is really bullish.
Walking uphill against a strong wind.
Yes. And so that's a good way to put it.
And I like your comment, point of vulnerability. That it's true in the markets. When markets are ready to turn, you're at that point.
Well, and here
you have to be aware of it.
Here, this decline started at exactly the same level of bullish percent as it is at right now. So that could be the flash point.
Well, we just had the RSI on that chart, or this bullish percent R dropping below that 60 level, probably on the RSI.
And this chart here, and we're all out of time. This chart here is just a closer up look. Andrew, thanks so much for being here. It's just fun. A gas, so much fun. We'll do it again real soon.
That's our goal: inform, educate, and entertain.
Thank you, brother. Take care.
You take care. Thanks, Bruce.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.